Hey folks, it's been a cold week at Coin Bureau HQ here in London, and the same can certainly be said for the blue chip cryptocurrency markets. Both Bitcoin and Ethereum have followed a serious downward trajectory over the past 7 days, with BTC falling well below $40,000 and Ethereum failing to pull above $3,000 for the last 3 to 4 days. Things haven't looked much better for our top metaverse and GameFi tokens either. Mana has fallen from highs of around $3.40 just a few days ago and nearly went as low as $2.60 in the past 24 hours. Sand, meanwhile, has followed a similar pattern, steadily decreasing from 7-day highs of more than $4.40 to lows of around $3.10 at the time of filming. Interestingly, Axie Infinity's AXS chart looks eerily similar to that of Decentraland's Mana, witnessing a slight uptrend over the last 24 hours. However, it has still been an insanely interesting week for updates and developments in the Web3 space, market conditions aside. So I'm going to start with my favourite story of the week, and that is that JP Morgan, the US's largest bank and a very conservative institution, has launched itself into the metaverse, the Decentraland metaverse to be precise. So, JP Morgan's newly established Onyx Lounge, located in Decentraland's Metajuku Mall, features a free-roaming virtual tiger as well as a digital portrait of JP Morgan top dog Jamie Dimon. Now, let's not forget that this is the same man who described Bitcoin and cryptocurrency as worthless. So, JP Morgan went one step further, describing the metaverse as a $1 trillion opportunity. That said, it also pointed out current barriers to metaverse adoption. These problems include factors such as flaws in user experience, poor avatar performance, and a lack of infrastructure. In tandem with this comes a report published by Messari detailing the implications of metaverse adoption with regards to the demand for three-dimensional rendering. It goes into detail on a cryptocurrency project called Render Network, ticker RNDR, which looks to use the spare GPU capacity of those running the network to effectively provide rendering tools on a mass scale. The kind of scale that would be necessary if metaverse adoption continued to grow. It's certainly a good read if you're at all interested in what widespread metaverse adoption might look like and require. What's more, Europe's largest wealth management firm, mundi, is considering the prospect of offering its clients a way to gain exposure to the NFT space specifically. At the moment, a key consideration is going into investing in companies operating in the NFT space. However, Amundi's chief investment officer, Vincent Mortier, floated the idea of a dedicated pure NFT fund too. According to Mortier, some artists are doing artwork only for the NFT market. This section of the market has some legs and is investable. Now, what I find particularly interesting is that Amundi's stance towards crypto more broadly remains cynical. On crypto, our views have not evolved. It's too speculative and there are a lot of question marks around it. Now, this seems to signify a bullishness on NFTs that is detached from the performance of the wider crypto ecosystem. Very interesting stuff. In similar news, the New York Stock Exchange has filed an application with the US Patent and Trademark Office to construct its own NFT marketplace. Now, this isn't NYSE's first foray into the Web3 space. It's minted a small number of NFTs in the past, commemorating the launch of various tech stocks on the exchange, including well-known brands like Spotify and Roblox. I'm curious to see if and how NYSE's prospective marketplace develops and whether or not it will be able to compete with the likes of OpenSea, Nifty Gateway and Rarible. So I'm excited by the developments around JP Morgan and the NYSE's growing interest in Web3. To me, this is the first wave of traditional institutional interest in NFTs and metaverses, and it will go a long way to gifting the space with additional credibility. However, it's not all good news for the NFT space. OpenSea, the world's most widely used NFT marketplace with a total transaction volume of $21 billion, has been coming under serious pressure of late. Not only are there a host of potential competitors emerging from the woodwork, such as Coinbase's marketplace and many others, but trust in the integrity of the organisation has faced substantial erosion too in recent months and weeks. OpenSea's history has been mired in stories of insider trading and corruption. Adding to this are various security issues with the platform. Only this week, a number of OpenSea users had their NFTs stolen in a phishing scam. In a Twitter announcement, OpenSea CEO Devin Finzer said the following: "As far as we can tell, this is a phishing attack. We don't believe it's connected to the OpenSea website. It appears 32 users thus far have signed a malicious payload from an attacker, and some of their NFTs were stolen." Now, perhaps this really wasn't OpenSea's fault directly. However, reports of another threat posed to OpenSea users is the last thing the platform needed amidst current sentiment. In other NFT-specific news, creators of the famous NBA Topshot, Dapper Labs, and its native Flow blockchain are back in headlines despite a sluggish month for NFT transaction volume. NBA Topshot is a fascinating case in that it was one of the first widely adopted platforms aimed at those without crypto experience. Each of its collectibles are NFTs, but with fiat on and off ramps, as well as multiple other user-friendly features. No prior crypto experience, therefore, is necessary to participate in the ecosystem or even make money trading NFTs. Now, Dapper's new UFC Strike, an NFT marketplace for the Ultimate Fighting Championship, launched in late January with 100,000 $50 NFTs up for grabs, and these sold out in just a few hours. What's more, the launch saw an estimated 60,000 new users participate in the drop, triggering a wave of Flow wallet signups. NFTs are at the forefront of the drive for mass adoption and understanding of cryptocurrency. In some respects, they're much easier to understand than, for instance, Layer 2 scaling solutions, and Dapper is making them even more accessible by bringing world-famous sports franchises into the space in a way that requires little to no pre-existing crypto knowledge. And finally, the Chinese government has taken aim at metaverses and the apparent risks involved in the space. Describing metaverses as attractive and deceptive, the Chinese Banking and Insurance Regulatory Commission has issued a risk warning to the public regarding metaverses. So far, China's stance on metaverses and NFTs hasn't been as hostile as its criticism of the broader crypto space. However, the country is now warning against the number of scams centered around metaverse-related projects. Often, P2E projects, for example, will make promises around game development and hardware integration, like VR and AR, before running away with the publicly raised funds once a certain threshold is reached. A translation of the public warning reads as follows: "The fraudulent activities under the banner of metaverse, which is more attractive and deceptive, and participants are prone to property damage. The public is requested to enhance their awareness of risk prevention and identification capabilities and beware of being deceived." Now, whilst China's view of blockchain and Web3 may be biased, it is true that the Web3 space is full of bad actors looking to take advantage of a revolutionary technology being in its infancy, and one should always stay diligent when it comes to investing in cryptocurrency of any kind, folks. So, all in all, a crazy week for Web3 adoption by traditional institutions, and the likes of Dapper Labs are continuing to further NFT adoption, bringing a whole host of users into the space. What's more, China is beginning to comment officially on the now too big to ignore metaverse trend. I expect to see further updates coming out of the country in the near future. So folks, I hope you found this week's events as interesting as we have, and we'd love to hear your thoughts as well. So, could a New York Stock Exchange NFT marketplace ever compete with industry leaders like OpenSea and LooksRare? Will other traditional firms like JP Morgan and Mundi jump aboard the Web3 train too? Are OpenSea's days as NFT top dog numbered? Let us know in the comments section below, and we will see you next week.